What's up everybody, Tom here with another video, and I don't know about you, but I'm certainly very hyped for November and December, what's in store for the markets. But first, we have to wait for the Fed's decision. Of course, this has got to do with the tapering event that everyone's expecting. Will the stock market have a taper tantrum similar to last time, or is it just going to keep powerhousing all the way into new highs and our key resistance levels? Stay tuned to find out more. This is going to be a good one, guys. All right, everybody. Well, here begins our market recap for the markets closed 2nd of November 2021. And we're straight away looking at a heat map of the S&P 500 here. But in today's video, we'll be covering our technical analysis levels and key zones for Tesla, Apple, Bitcoin, Russell 2000, Nasdaq, and of course the S&P 500 and more. Let's talk about Microsoft, Google, Apple. So all the FANG stocks, or a lot of the FANG stocks, were doing okay. Obviously, Amazon and Facebook a little bit down. Netflix also flat. But we did have a movement down from Tesla. And look, you have to expect a small decline with some profit taking coming in because, of course, it's been up 20%, 30% over the last couple of weeks. And it continues to chunk multiple percentage points per day. I think it was up 6 yesterday when we were taking a look at it. We also saw the healthcare sector doing very well. J&J, Pfizer, they were doing quite well throughout the session. And this is because, of course, approvals coming in and a whole bunch of, I guess you would say, market positive news to do with the vaccines, etc. Let's talk about the Nasdaq, Dow Jones, S&P 500, and IWM Russell, though. While the Russell was the weakest index of the day, this is the one that we're going to be focusing in on a little bit over the months of November and December. We've talked about the seasonality. We will talk about it again in this video. If you're a new subscriber or a new member of the channel, thank you so much for joining us. But the S&P 500, Dow, and Nasdaq were all pretty much up, but very even. And it came in very flat through the back end of the session, you'll notice here. And then, of course, we now have seen a little bit of a sell-off in the futures market ahead of the Fed taper decision. And everyone expects them to taper. The question is, will they do it with a lot of force, or will they just be like saying, okay, look, we're going to do it in this progressive step, really tell the market what's happening. And I think they may have learnt from what happened all that time ago in history that we'll be taking a look at in terms of 2013, because it was totally different back then and the market actually had a bit of a taper tantrum and it fell quite a lot. Let's go through XLB, biotech sector, breaking through, had a great technical on it in the previous session. We saw that continue to strengthen throughout the session in today's trade. And we had energy weakening a little bit there, consumer discretionary weakening as well, and mixed across the board. So no real clean sectors that were great, except I would say the biotech sector certainly did improve. When it comes to earnings season, and of course we're still in it, we need to be looking always at the beat rate. We're still sitting at 75% for a beat rate. Anything above 70% is very positive on the fundamental side for the market. So if you want to do basic fundamentals and know whether the market's healthy or not, it's really going to come down to how many companies are beating and how many are missing. And at this stage in the economic cycle, and of course this stage in the earnings cycle, we're seeing a huge amount of beat rates. We had quite a lot of big earnings coming out through the last session. We had, of course, Pfizer coming out. That did well. We also had Zillow Group did not do well. Good technical leading in, but this shows and highlights the points of why earnings can be so bad for traders, not necessarily investors always, but for traders. You've got to really focus on risk management because you might have the best trade looking plan, but when it goes into something like earnings, it can really come out the back end not looking so healthy. So remember, just always be careful there with some of these. We've got Roku coming later on the week, Qualcomm, Skills, Fastly. We'll be covering all of these in our live stream. Definitely join us tomorrow. I've got a special episode for the Wednesday session close. So we'll certainly look through all of these. And then we've got Square, Pinterest, Uber, Airbnb, Cloudflare. I mean, it's some big companies, some popular ones coming in from the Wednesday and Thursday session. So make sure you stay tuned for that. CSNAX data, we've talked about this quite a few times. This just gives us a bit of an expectation to what we might expect coming through November. We may expect a little bit of a early November dip, followed by quite a nice rally continuing on to the end of the year. And if this occurred, this would be absolutely A-OK. It's pretty positive, and it's fairly standard for the markets to do this. Remember, it's being traded like a seasonal for quite some time this year. We had pullbacks in the September period into October, very similar to what you would expect in a year like this year. And we also had that weakness in Feb and March, followed by the rally. So as long as it continues to trade this way, it becomes more, I guess you would say, predictable. And when it's more predictable, then we can make better investment decisions and trading decisions based on our swing, day trading, scalping, and of course, investing philosophies. We go over to the VIX. The volatility index continues to drop here a little bit, sitting around 16, so higher than it was during earnings season or the start of earnings season, but still much, much lower. No signs of this turning around just yet. And I think we're going to have to start looking at the PCC ratio. That's the put call ratio very soon, because that's probably going to show us a sign of when the market is actually possibly going to be weakening. But first off, let's talk about some stocks. Let's go through Tesla here to get started. So Tesla hit 1200, went up after hours to about 1220, and through the previous session, so that's the 2nd of November, we did get it pretty much just pulling back down a little bit. The 20 moving average, as in the 2-hour 20 moving average, is now floating back up behind it, and that's a good sign because that's what we've had find support a few times here. If you're still bullish Tesla, well, congratulations to you. We've obviously been incredibly bullish here on the channel from a technical perspective, all the way from back down in the 600s. But really what we're looking at now is it holding up the technicals that we have had. The 20 moving average on the 2-hour, will this be a dip? Will this be the zone where it hits 1100 maybe on a bit of a pullback, finds a bit of a dip purchase, and finds the strength in the day trade and the scalping concepts? Let's find out, and we should probably find out within the next couple of days if we're going to start to consolidate here. Another thing that we need to bring back by popular demand is, of course, the put call wall for Tesla. And the reason I've left it off is because there wasn't really any calls to worry about. And that's the most important thing when it comes to put call walls. Now, this poor guy over here, or this poor lady that's been trading these $740 puts for the expiry of 5th of November, they're going to lose massive. Look at these guys. They're sitting there with their massive amount of puts. Michael Burry, somebody else, who knows? But there's a lot of puts sitting around there. And I think Michael Burry said he's not shorting it anymore. But anyway, someone is. And there's still quite a lot of puts sitting at all these other zones that are waiting to expire. They're probably going to all expire worthless. And we are starting to see a little bit of call action. But this is what I get at. This is why I use options, because what happens is you'll see a huge stack of puts start to appear and you'll have very little calls, and the TA will be going in the direction of up. When that's happening, there's no call wall. Effectively, it's allowed to be in participation phase. And you'll find this is often the way it works. It kind of traps everyone to a psychological game. Then once it expires all those options worthless, it pushes through really, really hard, and you'll usually get great technical analysis coming along with that. Remember, TA is the first and foremost when you're talking about options, put walls, call walls, etc. We'll continue to cover it on the channel. If you enjoy this stuff, please remember to subscribe. Let's talk about Apple. Apple. 150, the level itself that cannot be closed above. We moved in the 4-hour above it, and then the daily came back down, and guess where we closed? 150.002 or something like that. It's just not quite getting through to show us that it wants to ramp into the November-December period. You might say, but Tom, there is a breakout here that's already happened. This was the day before earnings, or the day of earnings, and what happened was, I think this was more of a false break based on trapping some retailers into positions, and then of course crushing them back down through that session. So I'm going to call that a false break based on what we know. And we're looking now for a 150 plus closure, and then hopefully continuation of Apple into something like that 165 area into the end of the year. I'm actually thinking it could get through this 155, and we'll continue to look at calls and puts and the walls there as we find out more information throughout the weeks. Let's move over to IWM. So pretty strong weekly looking channel here. As we know, if we take a channel distance, this is A, so the distance of the channel in terms of the range. We can extrapolate that out if it does close above. And this is be a pivotal weekly close for IWM. A lot of you will be very excited with your analysis coming into this weekend, coming into the next couple of weeks, should we get a nice closure above these previous highs and a new all-time high closure. So we're looking for big moves in terms of percentages. This will actually be around 10 to 10.5% on an index, which is definitely no slouch when it comes to returns. And we've already detailed the fact that this has more runway in it than something like a Nasdaq or an S&P 500 in terms of where we see technical resistance. We've just seen 10 and a bit. we'll take a look at the S&P 500 and Nasdaq soon on what we think could happen next. Let's go through IWM, resistance, resistance, resistance. This is the fourth touch. The fourth touch does tend to break out more, and probably something like this will occur, where it breaks through, closes above, rallies a bit, pulls back down, tests the previous resistance, which becomes support, and then hopefully we get that movement up where we can start to day trade, scalp, and look at opportunities on its way to possibly the 260 price tag. IWM seasonality kind of proofs this. October has been pretty strong for IWM. Then we have November. Then we have a strongish December. Remember, over 60% and over 80% positive in the November period. And then we start to drop well back off into the January period by a seasonality standpoint. So very interesting stuff here out of the Russell 2000. And it's good to be back looking at the Russell again. Let's move over to the QQQ before we cover the S&P 500 and our thoughts on the taper tantrum. And here is the QQQ continuing to powerhouse up. Every day it seems to just be finding a little bit of extra green. And that's great. We are starting to move away from the 20 moving average here on the daily, which is something we'll watch. And we obviously have our key resistance level, which is based on all of these previous resistance highs and what a great level it will be should it come up. It's the same on the Nasdaq. I'll just put NDX on there so you guys can see it. Exact same principle, exact same ascending channel. We're still looking for any dips to be purchased off something like a 20 moving average. That's going to be one of the strong kind of buy zones should the taper tantrum occur. And that is where we're targeting. Basically, these top end resistances. If you're long, congratulations. It looks still very good. If you're short, I'm not sure what you're doing right now. Hopefully you're not short. But yes, it's looking relatively positive from a technical perspective towards the bull side. And any dips will most likely be met by buyer demand due to the seasonal, due to the time of year. And also, I think that the Fed has probably signaled a fair bit of this stuff. So a lot of people are going to be drawing synergies to the taper tantrums of the early 2010s, like 2013. So there was a taper tantrum that happened here, and it's quite well known. And basically what happened was the Fed came out, and I believe it was Ben Bernanke at the time. I was trading during that period. And he did a testimony in front of Congress, I think around May 22nd, 2013. And if you look at this, May 22nd, 2013, here it is. And all of a sudden, he's basically said, no clear timeline. We're not going to let you guys know too much about what exactly we're going to do, but we're going to slow the pace of our asset purchasing. So, of course, the tapering. This created the taper tantrum in the stock market, which was short-lived, but still, it came down. Let's have a look at the percentage that actually came down here. So from the top to the bottom came down around 7.41%. So you might think, ooh, that'd be pretty cool if it happened again. I don't think it's going to happen this way. And that's because the Fed's gotten better at signaling to the market what it's going to do. Remember, this was a little bit random. It was untested. QE was a relatively new thing in terms of quantitative easing. The whole policy was very different. And while it did create an initial sell-off, that was still short-lived, and we saw a buying back up due to the strong fundamentals. We're in earnings. We've seen the earnings have a 75% beat rate. Things are still looking pretty good fundamentally. We still have a huge tap on the markets in terms of how much is available in terms of liquidity. So while we're seeing price action so bullish and we're seeing very, very strong numbers coming out, it's hard for us to go with the idea of a crash, okay? Maybe a small dip or small movement down to a 20 moving average or something like that could be in order. But a big fully fledged taper tantrum fest, bearish market kind of thing seems unlikely at this stage. Remember, it's the Fed's best interest to make sure that the market is supported, and they don't really want to create instability. It's not what they want right now. So they will do everything they can to do that. And it's like non-farm payrolls, which we'll be talking about on Friday. Non-farm payrolls, every single number has been whatever it's been, but you'll notice the market has actually almost every time ended the session up. In fact, it's ended almost every one of them up. I think there's only 2 that are down out of the 14 since the pandemic lows. So yeah, very high statistics here in terms of how many of those non-farm payrolls, regardless of the number, have still been met by bullish pressure in the markets. Optimism does pay in this action. Let's take a look at the monthly R1. So this is the resistance pivot that we're looking at up here, and obviously our trend line that's being projected out. So if we slowly meander our way up here, would that be a perfect area to potentially be targeting as a resistance? Yeah, it makes a lot of sense. That's why we bring these technical ideas together. Do we also like the idea of a pullback back to the 20 moving average and continuation up? Absolutely. I would love it to go to 44.90, get a 50 here, and then pick up as well. But in most cases, I'm still looking at every one of these kind of pullbacks being opportunities for the market at this stage in these months, in these seasonals. Will we have a pullback next year? I'm sure we'll have plenty, but it's more likely to be that January, February stage, considering what we've just seen in the markets. We did have a pullback. Now we move to usually more of a bullish with small dips. Then we get another pullback. That's the way of the market, kind of churn and burn. Let's move over to Bitcoin, quickly talk about this, and then go into Ethereum. So Bitcoin is all over the place in terms of it's just kind of moving through. We discussed the idea that Ethereum BTC was looking a lot better in the previous video. And the reason why we discussed this is because think about the recovery. We have resistance, 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 double bottom, breaks through, closes above, and then now starts to ramp up. And what this allows Ethereum to do is we can basically start to say at this point, we entered maybe an altcoin style season where Bitcoin's going to consolidate a bit, Ethereum's going to look a lot stronger on the charts, and we should be focusing in on Ethereum. So remember, never discount the ETH-BTC chart, and we know where some resistances are there in terms of the ratios as well. We're looking around that 0.08 for Ethereum. So could Ethereum continue its run? Well, let's take a look at the technicals. The technical is basically a tweezer bottom here, very nice. We also have a 20 moving average on the daily being a great buy zone. It's found 2 buy zones, so the third one is more than likely. We've got the 1, we've got the 2. If it comes down and does the third, and then you get a little bit of a turnaround, will that be very strong? You would think so. And it's at 46.20 right now in the market. So are we going for a 5,000 for Ethereum? Let us know in the comments down below. Where do you see Ethereum next week? I want to know next week. Not in a year's time, not in 6 months' time, not in 3 months. Where do you see Ethereum next week from a market perspective? Very strong price action here. You can see the weekly close when it significantly broke above all others. And this starts that ramp. At the same time, guess what's happening? ETH-BTC ratios breaking through. It's a beautiful thing when you see these ratios happen. And it's been through quite a lot of other coins. You've also seen Polkadot do really strong numbers and a few others. We'll move over to the calendar now. We have big news, of course, coming. We've got the Fed statement coming out in terms of what are they going to do? What are they going to talk about? We have some other big information that's coming through. Let me just quickly get to the right week here, guys. There we are. And really what we're looking at is we're looking at the Fed's press conference statements. These are going to be the important things. What's happening with this tapering? Will the market even care? PMI will also be a big thing. 10 a.m. New York time. That's going to come out just before. And once we know a bit more about what the Fed are actually thinking, which I believe will be a slower asset purchase, but who knows? I'm guessing there completely. I think the market will be okay with it. Maybe a small little pullback followed by some bullish strength just to create a little bit of volatility. And then we'll have the really big number here with the non-farm employment change coming out on Friday. And if that's a strong number for the US, then things are really looking good. And I think we go on to our resistance highs. So what are you guys thinking? Let us know. Please remember to subscribe if you enjoy our videos, and we appreciate each and every one of you. Thanks so much, guys. Make sure you smash that like button as well. It helps us out on YouTube. Bye for now.